All right, welcome back, everyone, for another deep dive. Today we're tackling something that might not scream excitement. At first glance, organizational bookkeeping.
Yeah, it's not exactly the most glamorous topic.
But trust me, this stuff is the backbone of any successful organization. We're going beyond just like balancing checkbooks here. This is about really understanding the financial story of an organization. And luckily, I have an expert here with me today to help us decode it all.
Absolutely. It's all about turning those numbers, which, let's be honest, can be a little dry, into actionable insights. Things you can actually use to make smart decisions for your organization.
Love that. And speaking of insights, I've been digging into the source material you all sent in. And, well, let's just say I have a feeling we're about to unearth some serious bookkeeping gems today.
Let's do it.
But before we jump into the fancy stuff, now I got to lay down the foundation. So tell me, where do we even begin with this whole organizational bookkeeping thing?
Well, the absolute bedrock principle, and it's a simple one, but oh, so powerful, is this. Document everything. Seriously, every single financial transaction, no matter how small, needs to be recorded.
Makes sense. Got to have that paper trail.
Exactly. It's about creating this complete and accurate picture of your organization's money story.
Love that, the money story. Okay, so documentation check. Now, what about accrual accounting? That's a term that pops up a lot in these materials, but I'll be honest, it always makes my head spin a little.
I get it. It's one of those accounting buzzwords that can sound way more complicated than it really is.
Right. Like, break it down for me.
Okay, so imagine you're running this big project, right? You've got expenses piling up, materials, labor, the whole shebang.
Yeah.
But the client, they haven't paid you yet.
Happens all the time, unfortunately.
Now, with accrual accounting, you actually recognize those expenses right now, today, even though the cash hasn't physically left your account yet.
So it's like you're acknowledging the financial reality of the situation, even if the money's still in limbo.
Bingo! You got it. You're basically matching up your expenses with the revenue they're related to, giving you a much clearer picture of your actual financial health.
Ah, that's why it's such a big deal.
Yeah.
And I'm guessing this also plays a role in things like, I don't know, budgeting and future planning.
Huge role. Accrual accounting helps you see the true profitability of a project, even before all the invoices are settled. And that, my friend, is powerful information for decision making.
It's all starting to click now. Okay, so we've got our meticulous documentation. We're embracing the accrual accounting mindset. And how do we keep everything organized, make sure we're not just swimming in a sea of numbers?
That's where the magic of double entry bookkeeping comes in.
Get me with it.
Every transaction, and I mean every single one, gets recorded twice, once as a debit and once as a credit. It's like a beautiful dance of balance.
Okay, I'm intrigued. Debit and credit, what's the difference?
Simply put, debit is what's coming in and credit is what's going out. It's this built-in system of checks and balances that ensures everything stays in harmony.
I love that analogy, the dance of balance. All right, so our books are balanced, our transactions are meticulously documented. Now we need a roadmap to navigate this financial landscape, right?
We do indeed. And that roadmap is called the chart of accounts. Think of it as like the table of contents for an organization's entire financial story.
Okay, so it's basically a comprehensive list of all the accounts used to track financial activity.
Precisely. But here's where it gets interesting. This chart, it's not one size fits all. You got to break it down into categories that actually make sense for your specific organization.
Gotcha. So like a nonprofit's chart of accounts is going to look different from, say, a tech startup's.
Exactly. And even within an organization, different folks are going to be interested in different parts of this map. Think about it. Your board members, they're probably laser focused on the overall financial health, the big picture stuff.
Right. Well, the program staff, they need to know the nitty-gritty details of their specific budgets.
Exactly. And then you've got your funders who want to see how their contributions are being used, and the public who might be interested in the organization's transparency and impact. A well-structured chart of accounts speaks to all those different needs.
It's like a choose-your-own-adventure for financial data. Now, while we're on the topic of different perspectives, let's talk about financial reports. I keep seeing these terms, statement of activities and statement of position. Break those down for me.
You got it. The statement of activities is essentially your income statement. It tells the story of your organization's financial performance over a specific period of time. Think revenue, expenses, and that all-important bottom line. Did you end up with a surplus or a deficit?
Okay, that one's pretty straightforward. What about the statement of position?
Think of this as like a snapshot of your organization's financial health at a specific point in time. It tells you what the organization owns, those are your assets, what it owes, those are your liabilities, and what's left over for the organization, that's your net assets.
So it's like checking your bank balance, but for the entire organization.
You could say that, but it goes even deeper, giving you a really comprehensive view of your financial standing.
Now, I have a feeling that misinterpreting these reports could lead to, well, let's just say some less than ideal situations, right?
Oh, absolutely. Let's say you're looking at your statement of activities and you see this beautiful surplus, things are looking good, but you haven't factored in those big upcoming expenses that are actually hiding over in your statement of position. That kind of oversight, that can lead to some serious overspending and some very tough decisions down the road.
Oof. Yeah, that's a good reminder to always look at the full financial picture. Don't celebrate those surpluses too early.
Exactly. All right, so we've got our system set up. Our reports are telling the tale. What's the secret sauce to keeping it all running smoothly? I'm talking long-term sustainable bookkeeping practices.
Well, if you ask me, the key ingredient here is consistency.
100%. A consistent bookkeeping system, it's like a well-oiled machine. And I think the best analogy for this is actually baking a cake.
Oh, I love a good baking analogy.
Right, so you're following a recipe, you're carefully measuring ingredients, setting the oven temperature just right. But if you keep changing things up mid-bake, messing with the oven, adding extra ingredients willy-nilly, your cake is going to be a disaster.
A soggy, lopsided mess.
Exactly. Bookkeeping's the same way. Having those standardized procedures for how you enter data, how you reconcile those bank statements, how often you close the books, all of that, it ensures accuracy and helps prevent errors from creeping in.
Consistency is key. Duly noted. Okay, so we've covered the fundamentals. We're feeling good about our consistent bookkeeping practices. But now, for the truly adventurous souls out there, I want to touch on some of those more advanced bookkeeping concepts. Things like, oh, I don't know, recognizing revenue correctly and understanding the whole world of prepaid expenses. What do you say? Ready to dive deeper?
Let's do it. These are definitely key concepts to master if you want to really up your bookkeeping game.
Okay, so let's start with prepaid expenses. I'll admit this one always trips me up a little.
All right, so imagine you pay for a year of insurance up front, right? Big chunk of change. Now, that payment, it actually represents an asset for your organization because you've essentially pre-purchased a service that you're going to benefit from over time.
Okay, I'm following so far.
But here's the thing. If you record that entire insurance payment as an expense right away, it's going to distort your financial picture. You're essentially saying you used up the whole year's worth of insurance in one go.
Well, right, when really you're spreading that benefit out over the entire year.
Exactly. It's like, buying a bulk pack of toilet paper. You don't count it as an expense all at once. You spread it out as you use it.
I love a good toilet paper analogy.
Okay.
So prepaid expenses, check. Now, what about this whole world of capital assets and depreciation?
Ah, yes, the exciting world of depreciation.
So capital assets, those are things like buildings and equipment that are expected to last for more than a year.
Right. And depreciation is how we account for the wear and tear on those assets over time. It's basically acknowledging that, your trusty delivery van, it's not going to be worth as much 5 years from now as it is today.
Because it's going to have a lot more miles on it, probably a few more dents and dings.
Exactly. And understanding how depreciation works, that's essential for making smart financial decisions, both short-term and long-term. It can impact everything from your tax liability to your long-term budgeting plans.
Wow, it really is all connected, isn't it? All right, so we've covered a lot of ground here, from basic principles to some pretty sophisticated concepts. But I think there's one fundamental principle that underlies everything we've talked about today, and that's internal controls.
Absolutely. Internal controls, they're like the unsung heroes of organizational bookkeeping. They're the safeguards that protect your organization from errors, from fraud, from financial mismanagement in general.
And we're not just talking about fancy software systems here, right?
Yeah. Right. Internal controls, they can be as simple as separating financial duties, making sure no one person has complete control over the money.
Checks and balances, just like with our double-entry bookkeeping.
Exactly. Or it could be something like establishing clear purchasing policies, to prevent unauthorized spending. And of course, let's not forget about that good old-fashioned petty cash fund.
Oh yeah, the petty cash. Seems small, but Got to keep that organized too.
Absolutely. Petty cash, it needs its own set of checks and balances. Make sure it has a specific purpose, keep it in a secure location, and always require two signatures for any disbursement.
It's like a microcosm of the entire bookkeeping system. Right, so internal controls are crucial. Now, on the flip side, are there any big no-nos, things we should absolutely avoid when it comes to organizational bookkeeping?
Well, one big red flag that immediately comes to mind is loaning money to staff or board members.
Okay, yeah, that sounds like a recipe for disaster.
It is. It creates a huge conflict of interest and puts the organization's financial stability at risk.
So no matter how much you trust someone, personal finances and organizational funds, those should always stay separate.
Absolutely. Maintaining those clear boundaries and adhering to ethical financial practices, that's paramount.
Words to live by. All right, so wow, we really have covered a lot of ground today. From the fundamentals of double-entry bookkeeping to the nuances of depreciation to the crucial importance of internal controls, we've really delved into the essential elements of organizational bookkeeping.
And I hope you've all seen that it's not just about crunching numbers. A well-kept set of books, it tells a story. A story of financial health, of transparency, of responsible stewardship.
It's a story that deserves to be told accurately and with integrity. And I think that's a perfect note to end on. But as you all continue to navigate this fascinating world of organizational bookkeeping, I want to leave you with one final thought. How can you use these insights not just to balance the books, but to actually drive your mission forward?
That's the real goal, isn't it?
It is. All right, that's all the time we have for today's deep dive. As always, huge thanks to our expert for sharing their incredible insights and to all of you for tuning in and sending in your source material. Keep those questions coming, and we'll see you next time for another deep dive.
See you next time.